Agents, hey, this is Luis Moreno with Insurance Agent Training. Just got an email from Ambetter indicating some more, five. I thought there was only three, but now there's five changes that were going to be implemented that no longer are going to happen because of a court order. Ultimately, that's what it means. So I'm going to go over what those five things are right now. I put out a video a couple of days ago where we talked about three. Now it's up to five. So let's take a look at that. But before I share this with you, do me a favor. Please comment down below. Please like the video. And of course, if you're not a subscriber, man, help me out here and subscribe to my channel. All right, let's take a look at this. All right, here we go. All right, so this right here, what you're seeing, this is a CMS bulletin put out June 20th of this year, of 2025. And these were some of the changes that we're going to have to deal with going forward in the ACA world. All right. Now, what I have already done is I have circled here the ones that were supposed to be implemented, but no longer are going to be implemented due to this new court ruling. So the first one we'll talk about is the satisfaction of debt for past due premiums. This was going to be a nightmare. So just imagine, let's say 2 years ago, a client had a plan with Blue Cross Blue Shield. And for whatever reason, they didn't pay a couple of months of payment and it canceled. Or maybe they lost their subsidies. Premium went up from maybe $0 to $500 and they didn't pay. So now they've got a couple of months of past due premiums, policy canceled. Here we come a couple of years later, decide to enroll them again in Blue Cross, and they were going to have to meet that past debt. Man, what a nightmare this was going to be. Well, now, due to that court ruling, we no longer have to worry about it. As of right now, they're doing away with this satisfaction of debt for past due premiums. Cool. All right. Now, we still have some other things we're going to have to deal with, and we'll talk about that later. But let's go into number 2. Failure to file and reconcile. Yes, if these people don't file their taxes, they lose their subsidies. So with this final ruling, I believe that we're going back 1 year. So CMS is filing the reinstatement of its 2015 policy requiring exchanges to determine if an individual has filed their tax return. So here's the deal. There's the catch that I was looking for. So instead of going back, instead of a 1 year look back, they were going to go back 2 years where they're doing away with it. Let me make sure that's right. So failed to file their taxes and reconcile APTC for 1 year instead of 2 consecutive years. So so for 2 consecutive years, now it's back to 1 year. All right, fine. They're done. They've done away with that for now due to the court ruling. Number 3, income verification when tax data is unavailable. Pretty self-explanatory. Let's say they didn't file last year. Let's say that they just started a new business, so there's no income history. Well, it was probably going to generate an eligibility notice for us to prove it. Well, now they've done away with that. This is number 4 that they're dealing away with, is the requirement of a $5 premium when a renewal is passively renewed and they end up with a $0 premium. In other words, I think I went a little crazy there. Let's say you have a policy right now, they're paying 0 and it passively renews. So let's define passive. Passive means that you do not touch it. It just renews automatically. You don't update it. You don't get a new eligibility. You don't do anything to it. And it automatically re-enrolls with the same carrier and they end up with a $0 premium. All right. Well, instead of them keeping that $0 premium, they were going to bump it up to $5. You're like, well, what's the reason for $5? Well, the reason was there's a lot of people that have policies and don't even know that they have policies. So what this was going to do, it was going to put them on notice they have a $5. Then they'd have to pay it. Let's say they got a hold of you and they redid the application and it went to zero. Well, then it would drop back down to zero. But the ultimate point that I guess they were trying to make here is for those that didn't even know that they had a policy. Well, if they didn't pay that $5 one month, they didn't pay it the next month, then it would cancel, and they wouldn't have a policy for 12 months without knowing. All right, so that's number 4. Number 5, all marketplaces conducting eligibility verification for SEPs. So if you utilized a special election outside of the open enrollment, what this was going to do is they were going to my knowledge, is the 75 rule right here. This $75, my knowledge was that the 75% here was that when you submitted the paperwork, somebody was going to audit the paperwork to make sure that what you submitted was a true special election. All right. Well, they're doing away with that. Okay. So, good news, I believe. Okay. I think that's a good thing. So we're not going to have to worry about those 5 provisions. But what do we have to worry about? Okay. Well, the biggest thing that we have to worry about. But let's go back to the that article. So what are we going to have to worry about? Okay. Some of these things are technical, and I'm an agent like you guys. I mean, some of this stuff, okay, fine. It's a little hard to understand, but we're going to have to deal with a shortening of the OEP. Now, not for 2026. That is going to be a normal OEP. So we're going to have 2.5 months, November the 1st to January the 15th. But then the open enrollment for plans in 2027, they're going to shorten it to November the 1st to December the 15th. Okay, so that we're going to have to deal with. Okay, lawfully present, we're dealing with this. There were a few states that allowed people who were DACA recipients to enroll. Well, now across the board, no more DACA, no more eligibility into the ACA for DACA recipients. All right, the 60-day extension to resolve income inconsistencies. All right, so they're removing the 60-day extension. Okay, so pretty much if you've got an income inconsistency, you're going to have to submit that paperwork right away to prove whatever income you're stating that they have. All right. Income verification when data sources indicates the household is less than 100% of the FPL. Okay. So on here, it's when the income is too low and they get an income to qualify. I assume you're going to have to now, or in 2026, you're going to have to prove that income. Re-enrollment hierarchy standards. I think this means here that if they are in a silver plan, they're not going to automatically move them into a bronze plan. Okay. Monthly SEP. Okay, so this one they are doing away. In fact, they already did away with this one. Is people. So we had a SEP for low income. If they fit between the 100 and the 150% of the federal poverty level, they had a monthly SEP. Well, that August the 25th is gone. Okay, aligning the essential health benefits with benefits covered by employer plans. Okay, fine. Improving cost share, premium adjustments, and plan options. Well, here's what I'm thinking, guys, and this is what I do know at this point. At this point, what I know is the enhanced APTCs are gone for 2026. People still have them right now for 2025 plans. But in 2026, those enhancements, and there were 2 enhancements that we got. One enhancement was people got more help. Okay. Second enhancement were people with higher incomes got help. Well, and they removed the cliff. The cliff was when you got to the 400% level of the federal poverty level, if you were $1 over it, it's like literally you fell off the cliff and you got zero help. The enhancements made that cliff a gradual slope down. So there was really no falling off the cliff. Yes, as your income got higher and higher, the subsidies got lower and lower and lower and lower, but it was a gradual, nice decrease. Well, we have the cliff back. So if you're $1 over that level, you go from whatever help you could have gotten to zero. So that's what we're going to have to deal with in 2026 and going forward. And also those people that got more help, well, we're going back to the standard help. So what we are going to see going forward is higher premiums for the majority of people next year. And I've been told some statistics that are saying that all these people that have a $0 premium this year, 70-80% of them will have a premium next year. Okay, assuming they stay with that same silver plan. So there's going to be some shuffling among the different metal levels. What I'm predicting is this. You're going to have a client who's paying zero right now for a silver plan. Okay, they're going to have a premium in a silver plan going forward. They may not want to pay that premium. Okay, an alternative you're going to have to present to them is move them over into a bronze plan, maybe even a gold plan, depending on their income. So there's going to be more shuffling between the metal levels. But what I would recommend is that you stay ahead of the game. And when you do shuffle between those other carriers to save them money, what you're going to notice is you're going to increase their out of pocket. So have some solutions like some indemnity plans to help them solve that higher or protect them against that higher maximum amount of pocket they're going to have to deal with. Because a lot of people don't have money for that. Okay, so some of those products that I recommend, Allstate Health Solutions, super good. They've got a specific plan called a Plan Enhancer that I use all the time, and I think it's awesome. Okay, so we've got the Plan Enhancer. There's other indemnity plans with other carriers you can use. And finally, guys, I am also predicting we're going to lose a good chunk of our book. Okay, now in past years, we lost a good chunk of our book due to some rats out there, rat agents who were stealing. That's kind of come to a halt to a certain level. Okay, but now we're going to start losing them because these people are going to go from this premium to a higher premium, and they're just not going to pay. So you as the agent, you've got to have some solutions for them. Okay, short-term medical. I just got an email. I glanced over, and according to what I'm reading right now, in fact, here's what I'm going to do. I'm going to pull this email up so you guys can see it. Literally, it just came through. Let's take a look at this email. Hold on here. All right, here we go. So you should be seeing this email came from Allstate Health Solutions. And this is what right now, well, not right now, tomorrow, well, I can say right now. Right now, we deal with the short-term world of having a plan that can last no more than 4 months, 3 plus a 1 month extension. And then you got to move to another carrier. Well, according to Allstate, it's back. Longer duration, short-term medical plans are available again. So our short-term plans give customers the benefits they need, and it's lasting up to 12 months. So it's going to be a good thing. I guess we've got it back. They took it away, the 12-month option. It wasn't a full 12 months, guys. It was 1 day short of a year. Well, they took it away, forced us to do the 3+1, and now looks like we have it back according to this email. The only problem with short-term medical plans is this, guys. This is what the problem is. Give me 1 minute here. Okay, here we go. Trying to get my window open. Here's the problem with short-term medical. It is fully underwritten, which means they're not going to cover pre-existing conditions. It's usually a stripped-down policy, typically a major medical. And so it fits a certain demographic. So that could be one solution. MediShare, which is another It's not even insurance, but it's an option for people. And again, these guys don't cover health insurance. I have it. I've used it. It's been great, and it saves me close to $2,000 a month in premiums. I'm an example of this. There's some people out there that don't believe in it and don't like it. Hey, fine, knock yourself out. I believe on it. I believe in it because I used it. Okay, my kid almost broke his back. We went to the ER, spent some time in there. I spent some time in the hospital. He regained all mobility. He's 100% perfect now, which was great. But man, the bill was huge. Okay, Medicare paid out perfectly. I became a big believer at that point. So if you'd like to get a contract with Allstate, Meritus Dental and Vision, some of these ancillary carriers, send me an email. Okay, Luis at 360 Insurance Group. Send me an email and I'll get you set up. All right, guys. Finally, the last thing, if you click down below, I've got my ACA and Medicare Smartbooks. Okay, these are reference manuals that you can use to help do your job. Okay, I put them together. You buy it one time. Every year I update it. You get an email when I update it, but it gives you a lot of information at your fingertips, so you don't have to search for it. For a new agent, it is a valuable tool. Click one of the links down below that I have for you and go buy this book, or you can buy the bundle and save. I also have an ACA 101 course that I've updated. I have Agent CRM. Okay, the CRM is a tool that you cannot do without. It's like a carpenter. He has got to have a hammer. Okay, this is our insurance hammer. You got to have a CRM. It is valuable in so many ways. I just updated all of the automations to a 2.0 version, made them friendlier to use, a little more vibrant with emojis, and a better way of delivering whatever message we're giving them. I have automations for ACA. I have automations for Medicare, life and health, dental and vision, and P&C. Guys, you got to start using this. All right, and then finally, okay, I get asked this question a lot. Luis, you were almost 1,700 policies last year. Where did you get the leads? If only I could get my hands on leads. Wow, this would be magical. And guys, I advertise on social media, and I got no idea what I'm doing. Okay, so I bought a course. I bought it from Shauna, and it was a great course. One of my staff members studied it. They became really, really good at it. And now we advertise on social media with the tools that Shauna gave us. I partnered up with her. I've got a link down below. Click on the link and go get this course if you want to learn how to advertise, not just post. Talking about advertising on social media, Facebook and Instagram. Link is down below. Take advantage of it. Guys, this is Luis Moreno, Insurance Agent Training. Do not forget to comment down below. I'm the only one that answers. Okay, like this video so the algorithms push it to more agents. And finally, make sure you subscribe. Thank you.